Welcome to Trading Nation. I'm Rahel Solomon. Relief for Wall Street a day after the worst sell-off the Dow has seen this year. But our next guest says that he sees some warning signals hiding beneath the surface of the market that could portend more trouble ahead. Todd Sohn is Director of Technical Strategy at Strategas and joins me now. Todd, thanks for being with me.
Great, thanks for having me.
Of course. So what are you watching on the S&P?
So here's an important statistic. The S&P is only about 6% off the July highs and still in an uptrend by our work. Yet only about 40% of issues on the New York Stock Exchange can say the same, that they're also in an uptrend. So there's been some significant internal deterioration here that I think the S&P 500 has done a good job masking. And I think the longer you're sitting in this 40% area of stocks in an uptrend, the more it's going to weigh on these large cap indices over the coming weeks.
What about the bond market? What's the bond market telling you?
So if you look at S&P 500 is up about 13% this year, yet has actually underperformed bonds for a good chunk over the last few weeks. That's an oversold relationship we're looking at, but if you can get that to bounce and stocks start to outperform, I think you start to see risk assets, consumer discretionary versus consumer staples, high beta versus low beta, start to outperform, and that should in turn help get that 40% number up into the back half of the year.
How about levels for the S&P? What levels are you watching?
So 2730 is an important threshold for us. That's the June low. A few key indices, such as the banks, such as retail, have already broken below that. I think you don't want to see the S&P break below that June low. You're looking more towards the 2650 area if that does happen. I will say that.
So in the midst of all of this, then, Todd, where do you hide?
Well, let's see. Bonds. Here's an interesting thing. Bonds are about 18% above their 200-day moving average. That is historically extreme, right? So we're in the ballpark of some sort of mean reversion pullback occurring, I think, for the Treasury bond, the TLT ETF. That being said, I think until that reversion play does occur, you stick with some of the more defensive areas, utilities, staples, and REITs. I know they're not the most fascinating plays right now, but they are what has been working as we go through all these geopolitical events.
Okay. Todd, thanks for being with us today. We appreciate it.
Great. Thanks so much.
And thank you for watching Trading Nation. I'm Rahel Solomon. We'll see you next time.